YouTube, what is good, everybody? It's been too long since I made a video. It's probably been like, I couldn't even tell y'all. It's probably been like a month or two. Way too inconsistent. But the only reason why I've been so inconsistent with the channel is because my computer lags so much whenever I'm trying to edit that it makes it really hard to edit. Like, it really does. So when I'm trying to edit a video and trying to get it out and I get in flow state and stuff and I'm trying to put out a video, it's just just not processing. It's just not moving like how it should be. And it just keeps lagging and I have to keep going back and forth and over again. It's just not an enjoyable process. So, but I do want to try and be more consistent on the YouTube end because I do love trading. I do want to get into the YouTube space. So I'm trying to take this more seriously, and I just really had a lot going on with myself trading wise and getting some things together and just, trying to get back into the groove of things. So yeah, now I feel good. I feel better. I feel like I'm learning. I'm going to break down this trade for y'all. I did lose this trade, and I'm trying to be transparent with y'all, and I want to be one of the people that's on this space that actually does it for real. Now, I don't know if whenever I start making money from it and I start doing my own personal account, all that stuff like that, I don't know if I'm gonna do, because I be seeing so many people be getting exposed lately, and so many people in the comments be like, bro, expose or show us your bank statements, like prove it to us and stuff like that. And it's like, I get where you're coming from because you want to see that it's real, but that's what you feel like you have to see, that it's real. But at the same time, that's their business. Like, their bank statements and stuff is their business. So I never really understood that part, but I do understand also the other people's ends of, they want to make sure it's real, and that's just probably what it would take for them to be like, okay, yeah, this is something serious. But I want to be that person that, regardless of if people try to say that I'm fake or not, that I just want to be genuinely real. So I'm trying to be really transparent with y'all. So I'm gonna let y'all know everything that's going on right now. I'm on a 50K funded account with Live Guardian. It was a 2-step challenge. I already passed phase 1 and phase 2. I have the certificate and stuff and everything already. I'm trading on the account, and I was really trying to I really started messing my own trading up because, man, I ain't gonna lie to y'all. The Blue Guardian, when I was doing their phase 1 and phase 2, their leverage was 1 to 30, which was all right. It wasn't that bad. It made it real easy to pass the challenge. But then, whenever I got the live funded account, it went from 1 to 30 to 1 to 10 leverage. So that messed me up. That made me really... I can't get much money from my trades no more because I trade the 1 minute and the 15-second time frame, right? So now I'm trying to add all these other time frames in and stuff like that, but it's not working for me because I like moving under a fast-paced environment, which is why I like the 1 minute and the 15-second, because it's just candles just popping up, and I feel like I move better in a fast-paced environment over a trade forming over a couple of days. Like, now I know it's the same thing, but me personally, I like whenever it's just fast paced and candles moving and all this stuff coming in and stuff like that. I feel like I perform well under pressure. But yeah, I was trying to add in all these different time frames, add in all these different ways of how to make my strategy, or try to make my strategy better, or give me a better idea of bias, or I don't know. I was all over the place, but now I feel like I'm a little more grounded. I feel like I'm a little more calm now, and now I'm trying to implement the 5 minute in here, which I'm a little okay with the 5 minute. I'm trying to become more okay with it, because it does take the setup a little longer time for it to form with the 5 minute, but it's not too long. It's nothing crazy, but I just have to get out of the having a setup every day routine that the 1 minute gave me. And until I get into a new prop firm that gives me a 1 to at least a 1 to 30 leverage with gold, even on the live phase, which I already have a prop firm I'm looking into. We just gonna have to thug it out right now. So yeah, to keep it a buck with y'all, I started the account with 50,000. I'm down to 48,107 on the account. I did take a trade today. I lost $275. I took one in Asia session and lost $200. Yeah, and I lost $200. It's those two trades y'all are looking at right there. Those are the two trades. I took one this morning while I was at work and one yesterday evening, but yesterday evening counts towards today. So in total, I probably lost about $475. Let's see. This week. Yeah, in the week, I'm down about $466 on the account. As y'all can see, I have the account at... Oh, my fault, y'all. I got the account at $48,107. So, you know, it is what it is. If I blow this account, it's cool. I mean, this ain't my first blown account. This is like my fifth. If I blew this account, it would be my first time. It would be like my fifth blown account. But I mean, we not stopping here just because if this account gets blown, I'm done trading because I made it this far and now it's gone and yada yada. I mean, we're gonna start over. We're gonna get us another. We're gonna get us another account. We're gonna build up. We're gonna keep moving, and then we're just gonna keep growing. Bless me. Thank you anybody that said bless me. Thank you. I appreciate y'all. Feel like, cause that's what Corey does, bro. Anytime he sneezes mid game, he'll say like thank you. And I guess people have gotten so used to him saying thank you that like people actually say bless you when he sneezes, and then you just hear him say like thank you. So it's kind of I kind of like that about Corey because it's like it's funny and it's also kind of makes you feel like you're interacting with the guy. So I thought that was a really cool thing. So shout out Corey. Just hold on. I'm lighting an incense stick, so my attention's flying everywhere. All right, so back to what we really came here to do, because I want to keep this video nice and short, but still I'm trying to make better quality videos. And before I start editing it and stuff like that, if I can even edit it that much, if I choose not to edit this video this much, I want to make good quality content. I'm trying to be better. So even if that's giving y'all story times or trade breakdowns or live trading and me talking and stuff like that, I don't want to give y'all just a couple minutes slop. But then again, if I also I want to give y'all a couple minutes of really good quality content. Or if I make a longer video, I don't want to give y'all a long video slop. I want to give y'all something that y'all can really be like locked into, because I'm trying to take this more serious and stuff. And if y'all see more frequent videos, that's good. If not, bear with me. Just bear with me. But we're gonna break down this trade right here that I took at work. So right here where the red arrow is at is where I initially took the sell, and where the green arrow is at is where I got out because I saw that the trade was going against me, and based off of how the fair value gaps were operating, or how price was responding to the fair value gap, whenever I saw price put in this high, I came to the conclusion that if price is going to push past this fair value gap right here, then we're just going to reach for this high, which that's exactly what we did. So I didn't even wait for this candle to close because it looked like it was going to close, because it was already past it right here and there was like a minute and a half left. So I was like, let me take my loss while I'm down $271. So I just hopped out. But what I want to break down to y'all actually is how this trade that initially was going to play out. So as y'all can see, I was right about the sells. We're all the way down here right now. My problem wasn't the direction. My problem was I got in too early. So my initial reason for getting in was just hopping in on seeing the fair value gaps, like they were showing that, or for me, that what I was thinking was they were showing that the order flow was turning bearish. So I was like, all right, bet this would be a good chance to hop in and then jump down to the 1 minute and see if we could get in somewhere in here for a sell. But as y'all could see, I got in way too early, because my idea was that we took out this high over here coming into this fair value gap right here. We had this orange fair value gap right here. We had this bullish fair value gap right around here. It then came down and got rid of it. It also came down, got rid of this, turned this gray. And then after it did that, we came up, got rid of it, tapped into literally the only fair value gap around. And then I entered price. The first target would have been right here, but in all honesty, the longer target would have been right there, which honestly was not a bad trade. I mean, it went for more than a 1-to-1, obviously, but the problem was that I see now is that we entered into early. We didn't let the 5 minute develop enough, because this over here was not a liquidity sweep on the 5 minute. So we didn't even, my problem was I entered in before we swept buy side liquidity. So we didn't even have a high to sweep other than this high all the way up here. So even though I entered right here and I thought it was valid, the problem was we didn't take external liquidity on the 5 minute. We didn't take out any highs because the highs were still forming. So I entered right here, not knowing that I was just entering on a retracement that was creating the high for us to sweep. So as y'all can see, price did this. These little orange, by the way, these orange fair value gaps are for the 1 minute, and these red and green fair value gaps are for the 5 minute. The orange ones are bullish. The green ones are obviously bullish because, you know, green mean like being going up, and the red ones are bearish, means going down. These gray ones are also for the 1 minute. Those are the bearish ones, you know, mean going down. And then if a gray box or an orange box if the orange box has a black outline on it, or the gray box has a white outline on it, that's for the 15 second. That's how I kind of structure my boxes, so that way I'm not getting mixed up. I know what box is for what time frame based off of the color and whether or not it has an outline or not. So only the 15 second ones are outlined with a different color. The 1 minute boxes are solid colors, and the 5 minutes are a different color, which basically means they're either green or red. So now that I got that out the way to help give y'all a little more idea of where I was going with this, I saw once price created this high, and then we inversed this right here. So let me turn that green. As y'all can see, we inversed this right here. I'm gonna go ahead and clean this up for y'all, make it a little bit easier, and then we'll just break it down without having all this extra stuff in there. And then I can just write this up as we're going along, because this probably make it a lot easier. So we're gonna start from the beginning, y'all. Hear me out. Boom. Beautiful. Make it way more easier. So starting right here, right? Price created the high that we were looking for, right around here. So in this area, say we're on this candle, right? We still had this bearish fair value gap chilling up top. Right now, seeing what we know or having the knowledge that we know, once price inversed this right here, let me get this in there too, because there was that was there, but like I said, hold on, I'm trying to get all this written up for y'all. All right, bet. So seeing this, I'm immediately thinking, all right, there are these right here, but we just made a high, so it makes sense that we would need to take out sell side liquidity or buy side liquidity before we even think about sells, right? So we got rid of this bullish inverse fair value gap right here, right? And we respected this one too, right? My problem is that we came up in here and I thought that bullish, that order flow was bearish, because we came up in here and my idea was, this is the idea that leads to me thinking like, let's hop in, and I get in too early, is that I was trying to predict that the market was going to come up here, completely disregard this right here, run through it to attack this this sell side liquidity. Sorry y'all if I'm getting them mixed up. I don't know why. I'm trying to think of the words in my head and the sentences and stuff for the explanation. I'm trying to get better at teaching. Just stay with me now. So as y'all can see, my idea was that price was going to come up here, go through here, get rid of it, and then if price respected this fair value gap when it was still bearish, it would then come up, hit here, because we don't have anything in the way of stopping it. If we were to come here and respect this, we would then head down to all this sell side liquidity, with the first target being here, but ultimately looking for this low to get taken right there. As y'all can see, whenever I got in, I said, okay, if price pushes past this, which it did, turning it bullish, we're gonna have to change that, turning it bullish, I said, okay, we were gonna reach for this high, because it made sense, because if y'all look, the only real swing high that we have is this over here. We haven't taken out external liquidity, so of course it made sense that since we just put in a high right here, we just put in some buy side liquidity. I was the liquidity because I entered in somewhere along this here, so we'll say I entered in like around right here, right? I was the liquidity because I have my stop right here above this newly formed high, but that was the high that price was targeting, or the high that price generated in order to run through, in order to reach for this high to then have the real move happen. So my problem wasn't that I didn't have the right directional bias. My problem was that I was hopping in too early, because I came up with the idea of, if price comes up here and gets rid of this, then we should go down here as long as we respect this, which wasn't a bad idea. But the thing that idea was missing was a sweep of buy side liquidity. That should be the number one thing before I even worry about like the fair value gaps and stuff. If price has not swept a swing high or a swing low yet, there is no reason I need to be hopping in the trade. So that right there is a big thing I've learned from this. Now, once price turned this bullish, as y'all can see, we created another bullish fair value gap. Price then runs through this, creating a bullish inverse fair value gap, reacting off of this one just to come and hit all of these, to then push past these two, getting rid of that one and turning this one bullish. So as y'all can see by how price is using bullish PD arrays to invalidate bearish PD arrays and get rid of them. We can tell that order flow is bullish. So as long as order flow is bullish, we can expect for price to come to these highs, that's exactly what it did. So as y'all can see, we created another bullish fair value gap right here. Price then comes down, taps into these bullish gaps right here, uses them to then run up and take the high that we predicted it was going to take. So now, not only here, but here have we swept buy side liquidity. So now that we have our liquidity swept, this is when we start looking for order flow to turn bearish, so that way we can come down here and target all of these lows down here. Now my ultimate target is crazy. This is how I see a lot of professional traders do, or a lot of people like up top. Sometimes some people leave runners, some people don't. I mean, some people take partials and leave runners. Some people just leave the trade completely open or let it close by itself, just the whole position. It really just depends on the trader. I feel like it's good either way. I feel like it just depends on the trader. I don't feel like there's right or wrong when it comes to that, but I can't really say which one's better because I don't do both. I prefer not to take partials, but partials are a good thing to do. So if that's something you develop, then that's absolutely great. So right here we have all these lows. Like for somebody that takes partials, this could be TP1, this could be TP2, and then this could be your TP3 at the bottom. So price has come up here and swept swept both of these liquidities. So now that we have external liquidity on our higher time frame taken, now we're waiting for the order flow to turn bearish since we took a buy side. So as y'all can see right here, price closes over, or it closes over this, turning this bullish now. So all we got right now is nothing but bullish PD arrays. All right, so we want to see some of these get disrespected while also having some bullish PD arrays turn into bearish PD arrays, while also having the bullish ones get disrespected and them being gotten rid of. So I hope I said that right. So as y'all can see right here, we turned this fair value gap bullish, right? So as y'all can see, price comes down, and we inverse this bullish PD array, turning it bearish. We then come down again, we get rid of a bullish PD array, we inverse another bullish PD array, turning it bearish. And if we can look right here, we still respect that PD array, but with having gotten rid of one PD array, flipping a bullish one into a bearish PD array, we got rid of, I'm pretty sure we got rid of, then this one right here, we took another bullish PD array and turned it bearish. So now for me, what I'm expecting is for price to then use this PD array, this bullish PD array right here, to bounce us up into bearish PD arrays, for them to then send us back down, ignoring all of these as long as order flow is bearish, to take out all these lows, which is exactly what it did, right? So once price did that, after this candle close, so at 14:10 is when we would drop down to our 1 minute time frame for confirmation. The higher time frame is what we use for directional bias. Middle time frame is for confirmation. Lower time frame is for execution, which means like entering and getting a real precise entry. So we already know we're supposed to be entering at 14:10, right? Or we're supposed to be looking at 14:10. 1410 is this black candle right here. I don't know if y'all can see that or not. 1410 is this black candle right here. What can we see from here? Price already swept 1 minute liquidity all the way up here. We swept 1 minute buy side already. Let's see. Shout out ICT, man, because all of these are his concepts. So I just want to give him his flowers because all of these are his concepts. So as y'all can see right here, we swept buy side liquidity already. While respecting, we're gonna go ahead and do what I told y'all, turn these gray and stuff. Turn these gray and then do orange and stuff. So we're already respecting a bearish PD array after sweeping sell side liquidity and getting a pretty nice reaction from it. So we're at 1410 right now. What we are then looking for, because let me check. We took it right here, made it right there. So where are our PD arrays at? Right now we're looking for our PD arrays, trying to distinguish which one is, this is still orange. That was gonna turn, I got rid of. So yeah, we really don't have many PD arrays right now. So what I'm looking for is, oh man, sorry, I'm trying to figure out the PD arrays. I'm trying to figure out or confirm that the order flow is bearish on our middle time frame. So we came here, we created a bullish fair value gap. We then absolutely run through it, causing it to turn gray. We already swept liquidity all the way over here, so I'm not too worried about it. And as y'all can see, there's no other PD arrays. There's no other PD arrays. This is the only one right here. We respected this one while taking sell side liquidity. We got a nice reaction down off of it, and it canceled out all of our other bullish PD arrays, leaving only this bearish one right here. So it makes sense for us to then climb down or go down to the 15-second time frame, our lower time frame, right here at 1416. So let's see. We then go down here. What I'm looking for on this time frame is a liquidity sweep in the opposite direction of which we are going. So in this case, we are targeting sell side liquidity. So we want to see buy side liquidity get swept, and then after buy side liquidity gets swept, we then want to see order flow turn to bearish order flow, so that way it matches our highest time frame or our higher time frame. So we're starting here where the fair value gap touched, right now our buy side liquidity on our lower time frame would be this right here. You can say we could keep up with the fair value gaps, but right now I'm really not going to worry about them too much because we haven't really we haven't really swept any buy side liquidity. So right here, we go here, you see price then prints this high right here. After price prints that high, and then goes here, does all this working right here, reacts off of our 5-minute bullish fair value gap, and then comes up here, and what does it do? It sweeps buy side liquidity. Boom, first thing done. Now, what do we also notice? We also notice that it sweeps buy side liquidity in a bearish fair value gap, which is the direction that we are trying to go to. That's the sell side that we're trying to reach down to. So we're trying to get bearish order flow. So we love to see bearish PD arrays being respected. So now we're waiting for sorry, I'm in my noggin. I'm in my head. Now we're waiting for price to show us that order flow has turned bearish. So in this case, we swept up here. So we have that fair value gap right there. Y'all gonna see a lot of clicking, but I promise you, we're almost done with the explanation. We got that one right there. this one right here. It's gonna be a lot of drawing, y'all. Stay with me now. Stay with me now. I'll try to throw some music in here if it gets boring, y'all. I got y'all. But the ones that are really paying attention, stay with me now. So I'm marking up all these gaps that are showing us where the bullish PD arrays or the bullish fair value gaps are. So right now, that would be where everything is at, or majority of everything. Gotta keep on marking it. All right, we're good now. We're good. We see anything else? There's that one last little one. I'm trying to get the full story here, so I'm trying to get all the gaps. Price then starts up here. It sweeps. After that, tiny one. Yeah, after that, we then make this bullish fair value gap turn bearish. We then get rid of this bullish one. We go down a little bit more. We then turn this one. We then turn this one bearish while also getting rid of this one. Then we create this bullish. We create this bearish fair value gap right there. We then come down one more time. We leave it, but we create another bearish fair value gap. We print another candle, we now turn this one bearish as well. Seeing that order flow is bearish, so this is a pretty good sign, guys, pretty good sign. Now, it also gets rid of this. We're loving this, we love seeing this. Now, I'm gonna show y'all why whenever price comes back up here that y'all don't enter, because this is just from my own experience. Now, price could definitely come here and then go down here, but from my experience, that's just not very likely. So I'll tell y'all in a minute. So price, what is this one? Price then turns this one bearish as well, and then gets rid of this one. So as y'all can see, price got rid of all of our bullish fair value gaps and inverse fair value gaps in like quick succession, right? So now all we're leaving behind is bullish PD arrays. Bearish PD arrays, sorry. Now, this is just from my experience with this strategy and stuff, but now we came all the way down here. Why I wouldn't enter seeing all this is because even though this is the high that I'm gonna put my stop loss over, and it should be protected as long as, this is the direction that we're going into, and nothing crazy happens in the market or whatever. I'm not entering here and then putting my stop loss all the way up here. That's bad positioning. Also, whenever price tends to come all the way down here and stuff like that, what I'm anticipating is for price to then come back up, flip all of these, or not all of these, but start flipping these and start going more back into a bullish order flow for a retracement. That's why, because whenever price comes down right here, I'm expecting it to then flip some of these bearish fair value gaps and inverse fair value gaps, because price needs to retrace. So I'm not trying to enter at the bottom of the first move. I'm trying to enter at the retracement. So what I wait for is for price to then come back, start disrespecting some of these, start going have the order flow start going bullish, so that way we can retrace and stuff like that, and then I'll enter on a bearish PD array whenever price switches back to bearish. So as y'all can see right here, price comes up. We then turn this bearish PD array bullish. We then create a bullish fair value gap. By the way, y'all, PD array, fair value gap, if y'all don't know it, y'all don't know the correlation, it's the same thing. A fair value gap and an inverse fair value gap is a PD array. All a PD array is point of interest, or you could just call it a POI or a AOI, area of interest, but all a PD array is just the fair value gaps and the inverse fair value gaps. So if you hear me saying PD array and switching it up and saying fair value gap, inverse fair value gaps, just know that I'm talking about the same thing, which is just these boxes and like areas where, you know, price is likely to be attracted to. So price comes over here, creates this bullish fair value gap. We then push past this bearish one, turning it bullish. We then push past this one, getting rid of it. Come down here, use this one to go up more into this one. We then create a bullish fair value gap, using it to get rid of this one. Then flip this one, and then we come up in here. We then use that to get rid of this, creating this one, turning it orange, and ultimately getting rid of this one and turning it orange as well. Now, as y'all can see, now there's nothing but bullish fair value gaps on there, right? Like I said, y'all can see. Y'all saw how price was using the fair value gaps and inverse fair value gaps to go up, showing that order flow is bullish, right? So this is what price usually does whenever it makes a retracement. So this is where patience is like really key to get that good positioning. So now what we want to see is eventually we already got our liquidity sweep. Price came all the way down. We only waited for price to come back up like that is because we don't want to enter in down here, enter in here, anything like that, because if price starts coming back up and order flow is bullish, you want to enter in when order flow is bearish if you have a bearish bias, which we have a bearish bias based off of our higher time frame and getting confirmation from our middle time frame. So excuse me, y'all. Price comes up, touches this bearish fair value gap, it then gets rid of this. Okay. One fair value gap or one inverse fair value gap being gotten rid of is not enough to convince me. We then come down here. Hold on, y'all. Hold on. Trying to think. We then get rid of this, get rid of another one, and make this gray. So now we've gotten rid of this inverse fair value gap. We've gotten rid of this one, and we flipped this one from bullish to bearish. Now, what I could expect from this is for price to bounce here, give us an entry right here, which is exactly what it did. You could put your stop on this high, which is what I would have done, or you could put it up here for a little more safety if you want, but really putting it right here is just fine. And you would go to your higher time frame and target those lows I was telling y'all about. Now there is another entry once price breaks down here, turns this bearish, leaves behind this bearish, hits this, then once it hits this, y'all, here's another entry right here. Stop will be all the way right here. That's another entry. Now if y'all want to, y'all could also move, like enter in right here, or price create another fair value gap so you can see if price will enter in there just to get better positioning. I also see that price came back up to our first position to give a re-entry, crazy enough, and then it started heading back down. So for this example, we're just going to say that we entered in here because that's where I would have entered in taking that risk. But I had enough. It was enough convincing. We got rid of this one. We got rid of this one. We flipped this one. I anticipated we come here to touch here to then go back down, which is, y'all can see what we did. So after we got our entry, we then go back up to our higher time frame. We'll move this out. We go back up to our higher time frame. We entered in. Where did we enter? I want to get a time stamp. I want to get a time stamp for when we entered, because I think I broke that down pretty well. I think I broke it down pretty well. So we entered in at 14:38 on the dot. So that's like 2:38. Look at that, guys. That's great positioning right there, because we come all the way down here. We have our stop. That's great, because we have our stop on a 15-second high. That's huge, because that limits our stop from having, we enter here and our stop goes all the way up here. Instead, our stop is just, we enter here and our stop is just right here. We only have a $5 stop. That's great. Now you could aim for, like, look at that, guys. TP1 is a 1 to 4.72 RR. That's huge. Getting TP1 is more than enough to make a good amount of money. And then you go down to TP2 right here, and TP2 is, hold on, y'all. TP2 is a 1 to 5.64. That's great positioning. Or if y'all want to, what I would have personally done, I feel like, is me. I ain't gonna lie to y'all, it would have been very risky. It would have been very risky. I would have kept an eye on it, but I would have put my TP all the way down here. Only because there's no bullish PD arrays to stop us. There's no bullish PD arrays for us to bounce from. Now, obviously, we're getting displacement down, leaving behind bearish PD arrays. Now, since we know we have no bullish PD arrays to, get much power from and push us through the bearish PD arrays, we know that it's likely, but it's not that it will happen, but it's likely, since there's nothing else in the way, it's likely that when price retraces into the, I'm trying to think, y'all. When price retraces into the bearish PD arrays, we'll just use that to continue the move downward, which is, as y'all can see, is exactly what we did. When price finally decided to retrace, all we did was come up in here and use the bearish PD array, respecting it, to then come here. We used another bearish PD array, respected it, while also respecting this one and tapping this one, to then finish the move downward and sweep the rest of our liquidity. That's textbook. And I love that I just explained that in not one, not two, but 3 time frames. I broke down one trade for y'all in 3 time frames. One time frame for our directional bias, the middle time frame to confirm. Hey, look how that looks, bro. That's crazy. The middle time frame to confirm our directional bias, and then our lower time frame to get not only extra confirmation, but to get that sniper entry. Like, look at that. Look how much price action we caught. Even if this is a 15 second time frame, look at how much price action we caught. We caught gold at $4,882, and we sold gold at $4,834. So we went from 882 to 834. That's what? That's like 48? No. Before I get that wrong. Because if you put 50 here, that would be 4. So yeah, 48. Yeah, I'm right. That's $48. I don't know if that's what handles are when ICT says handles and stuff like that, but that is a lot of price action, I feel like. Because even on the 5-minute, let's look at that. Trade locker, don't do this to me, baby. Don't do this to me in the middle of the breakdown. No. Alright, bet. We're back. Wait, let's see if we can get on the 5-minute. Alright, bet, we're back. Oh, that was close. But like, look at that, guys. What is that? That is a 1 to 10.4 RR. And now you might be asking, Trey, A-list trader, whatever. I might not even make myself the A-list trader anymore. I might just make it Trey USD, or make it just keep it Trey or something. I'll just keep it nice and simple, a nickname. It's whatever, bro. I'm just here to enjoy trading, enjoy making YouTube videos. As y'all can tell by the video being almost an hour long, and it's a trade breakdown. But like, guys, that is a one. Oh my god, that is a 1 to 10.4 RR. Look at that. This is the style of trading that I took all those nights at that other job, like just grinding to learn this style that I understand and that works for me. Like, look, that's 3 racks, and y'all might be like, that's not much. Well, I might have been messed up with money, bro. Like, as far as like how you can get it, bro. Like 3K, like that's basically 4K right there, bro. Like 4K, don't get me wrong, 4K is a lot. It's like, it's crazy, bro. That's somebody's monthly income. And I could have made that. My problem was that I just entered in too early. I wasn't patient enough, and I wasn't patient enough. I didn't wait, and also I didn't understand how to what's the correct term? I didn't understand how to blend the time frames perfectly, or like how I just broke it down. But now, breaking it down, I have a way better idea of how to like mesh them together. And yeah, that's gas. That's gas, bro. Like 3K, bro. $3,967. Like, guys, let's put this into perspective. I entered this hoe at 1438, so that's gonna be like 1435. So 235, and I got added. Guys, this trade didn't even take 2 hours. Yeah, it did. No, it didn't. It took like an hour and 25. There's 25 minutes left. I'm trying to think, y'all. I'm trying to really process this. It took like an hour and a half. Yeah, that's exactly what it took. It took like an hour and 35 minutes. So basically, it took an hour and a half to make 4 bands, bro. I'm telling y'all, bro. Even then, if we went to TP1, look how much that is. That's still not even bad at all. That's like 12. That's like 1,200 right there. Yeah, that's 1,700. And how long did that take? I entered at 1435. So, all right, to 1438. So 1438, 238. That took. That took 17 minutes. That took 17 minutes to do, bro. Ain't that crazy? 17 minutes is all it took to make that bread. That's crazy, y'all. Well, all right, y'all. That's all my trade breakdown. I just wanted to go over the trade I took with y'all today, and seeing how it played out. I just wanted to break it down to y'all. This is not the trade I took. I lost today, as y'all saw from the beginning. Remember, these are the 2 trades I took today, or yeah, technically today. I lost 200 on one from yesterday in the evening, and I lost 275 today, which was this trade that I took right here on the retracement, and I lost the 275. This right here is just a breakdown of the trade that the market presented to me if I had taken a little more time, had a little more patience, analyzed, and waited for step one of the plan that I now know and have a better understanding of thanks to this breakdown is wait for a sweep of liquidity. Anyway, y'all, I appreciate y'all for the time. There's probably not gonna be much editing in this video other than the intro and having a bunch of music, but I appreciate y'all for y'all's time. I'll try to be more consistent, I promise. Just bear with me, and I'll catch y'all boys in the next breakdown or live trading video. See y'all.